Employment increased by the most that we've seen in 3 years, but the unemployment rate held in at that 9.7%. While the headline sounds good, Morgan Stanley, Goldman Sachs, Barclays all had called for much more job growth than the actual 162,000 jobs that we saw in this latest payroll report. Lebas, Janney Montgomery, was fairly close, actually, looking for 105,000. Bloomberg crunched the numbers to find the most accurate forecasters in the world. Guy's one of them. He's one of Bloomberg's best, and he joins us now from Philadelphia. Good morning to you, Guy. You're one of the very, very few people in your office today.
It's a ghost town out there.
Well, maybe some of that extra work you're putting in is why you were more accurate than some in coming in with this forecast. You and I both know, I mean, there were a lot of very prominent people calling for much more of a build. The whisper number even was, after having been revised, higher than what we actually got. So why is this number being read as positively as it is?
I think the positive read is just absolutely from one thing, which is the idea that our economy, our economic recovery, is entering a new phase. You know, we've been saying for about 6 months now that the labor market was the single biggest risk to downside economic activity for the U.S. Well, this March data point really proves that downside risk is abating sharply. And I think that's what the world is focused on, and that's certainly what we're focused on today.
So a less robust number could actually be a good thing in some ways, right? I mean, for your colleagues who do trade equities, it's a sign that perhaps the Fed may be holding steady where they are. Is that, as an economist, how you read this?
Perhaps, yes. I think the real focus here is that we need to look at the picture 2 to 3 to 4 years down the road and recognize that it's going to be a very slow process in regaining the jobs that have been lost over the last, 28 months or so. So we need to really look long-term down the road. And, of course, that's exactly what the Federal Reserve is tasked with doing. They're looking at the picture 6 months, 12 months, a couple years down the road, and recognizing that it's not going to be instantly better.
So what, 40% of those who are unemployed stay that way for 6 months or more. So that rate of 9.7%, you have people as prominent as Alan Greenspan saying, get used to that number. It's going to stick around for a while. So tell me, farther down the road, what is going to happen in terms of that churn? Because it doesn't seem that the job growth is soaking those people up as quickly as some would like.
Oh, the reality of the matter is, if you're a corporate manager, it's far easier and far less of a commitment to cut a job than it is to add that job back on. So that's one of the reasons that we sort of feel, structurally speaking, job growth tends to be a lot slower than the pace of job losses. Now, we had such dramatically fast job losses over the last almost 2 years, and the pace of job growth simply cannot match up to that. It's going to take much longer to regain those jobs. And that's a big problem for consumer spending, but we still believe that we have actually reached a bottom at this point.
A bottom. Talk to me about temporary workers, because we saw temporary hiring rise another 40,000. Some say that's an indicator that, you know, people are sort of shopping the talent before they buy it. Some say that is a sign that that's not a real job, that that's not real traction, a real foothold. How do you read temporary?
Well, in economic terms, a temporary job is not as valuable as a long-term, again, structural sort of job. But at the same time, it does indicate that corporations are investing in producing more product and more services, et cetera. And I think that's a good early indicator. Now, another sort of temporary job is an early indicator
of actual hiring, or simply just the new normal of people getting used to having jobs without benefits and fewer hours?
An early indicator of hiring in the months to come. Because, again, not necessarily are those jobs going to convert directly into permanent jobs, but those jobs indicate that corporations are investing in new labor, and that's a key point. They were not doing that through the vast majority of 2009.